Will, how are you doing, sir?
Man, I'm doing great. One
All
second
right.
here. I got a little feedback.
All right.
Okay. You hear me okay?
Yep. No, hear you loud and clear there, sir.
Man, thank you. Man, thank you for joining me, man. I know your time is
Yeah. No,
precious,
no.
man. And you this is a great program that you guys have. And I just wanted to kind of give my audience, I'm trying to build up my social media and my YouTube audience
Yeah.
and get some information out there to realtors and buyers. And a lot of people don't know about T-Shack, and I'm surprised, but you'd be surprised. A lot of people don't hear the information, even a lot of realtors.
Yep.
You're
Yep.
right.
No,
So,
no. Absolutely. So no, and trust me, I love doing this because I'm never afraid to drop my hot sports opinion, if you will,
okay.
on the power of home ownership and why we do what we do, and especially for consumers to be able to use the tools that are out there, so that way they can become homeowners.
Yeah, that's it. That's why I got in this business. So, man, um, I kind of want to, like I said, I'm not going to take up a whole bunch of your time.
Yeah.
My orders, I don't have to. I'm going to do a brief introduction on myself. Retired military. I did 26 years in the Navy, man, and took some time off and decided I wanted to help people get homes and build generational wealth. And here I am as a loan officer a year and a half later.
Amen to that. Well, thank
Yeah,
you for your service,
yeah, I
and
appreciate that.
yeah, I mean the mortgage business. I mean I've been doing this a long time, so it is rare that we become blessed that we find something that could have as much impact on other folks out there.
Yes, yes, and real estate's the way to do it. So it's usually a win-win if you do it right. Actually, sometimes if you do it wrong, you can still be on the right end of that, you
This
know.
is true. This is true.
Right. So John, let me introduce you, Rick. This is John Hudson. He's the executive vice president of Mortgage Financial Services on the wholesale side, correct?
That is correct.
Okay.
So I help run our wholesale division. To what we do at MFS TPO is we equip our mortgage broker partners like yourself to be able to go out there and serve their communities and their referral partners, and ultimately, right? I mean, serve the major purpose, which is putting folks into homes.
Yes, sir. Yes, sir. So I know on the broker side, we have tons of products that we can offer people, a lot more than they can on the retail side. You have your basic on the retail, your conventional FHA, VA, USDA, but on the wholesale side, you could do some other things, right? So just kind of tell me, I wanted to kind of touch base with the Texas State Affordable Housing Corporation and how
Yep.
you guys are working with them, helping people get homes with down payment assistance, and how you integrate that with the products, the loan products that you have and that you can offer.
Absolutely. And Will, if you don't mind, can I share my screen?
I'm sorry.
Can I share my screen?
Oh yeah, go right ahead.
Okay,
Yeah, you
great.
should have the option.
No,
Should be
no,
open to you.
perfect. Because me personally, right? I mean, I think it's important to kind of tell the story, is to partially why we do what we do, why do we offer down payment assistance programs, and I've got a couple slides out there that I think will kind of help also shape the story for both your home buyers as well as your referral partners out there, so they can also you see exactly what kind of impact do we have as housing professionals on families out there. So let me see, where's my, here we go,
Okay.
share
You
screen.
see share? Okay, yeah, it should be right there,
All right, and
right there by the settings button.
yes, okay, now I gotta find which monitor it is here. All right, it should be, oh, okay, and share. Okay, so
There
let me
you
do
go.
this. Can you see that?
Yeah, so I'm adding to the scene right now. Yeah, I have it here. So
Okay,
hold on, let me do this real quick. 1 second. Yeah, get you back together
perfect.
and make it look a little better and get it squared up. All right, how's that? You like
Let's
that?
see here. I can't see it because I'm
You
looking at
can't
my
see it.
PowerPoint. I'm
Okay.
looking at the PowerPoint. So,
Okay.
but if you,
You'll see the finished product when I finish spicing it up a little bit and send it to you. But it looks good. It looks
okay,
good.
awesome. Awesome. So,
Okay.
so I've got some slides from a broker roundtable that we did not too long ago, as MFS TPO, right? Just from an educational standpoint, to help teach everybody that, why these programs are so important. So let me dig in here. Okay. So, well, this was kind of funny. This little picture here. So, me personally, I've actually been in the business now for 26 years. Believe it or
Wow.
not. I mean, that's
Nice.
it's not the years, it's the mileage, right?
Hmm.
But I started out as an intern. Didn't know, barely knew there was a T in mortgage, right? I mean, they really don't teach you mortgages in college. And I was basically just an assistant, and after a couple months, I got to go and attend my first closing. The loan officer I worked for took me to a closing, and I'll never forget this lady's face and her blonde curly hair, and she's wearing blue nursing scrubs. And this woman started crying at the closing table. It was down in Crowley, Texas. Small loan, like $90,000, something like that. But this woman started crying at the closing table, and when asked why was she crying, she said it was because she was a single mom, and she finally did something by herself, and she got her kids a backyard that they could play in.
Nice.
And maybe it was divine intervention or a sign, right? Because my folks were split when I was a kid. My mom happened to be a nurse, so but it was interesting because all of a sudden I saw, wow, there's this mortgage thing is really powerful. I mean, look at the emotional impact that it's having on this woman and the single mom that just wants a better life for her and her family. So, on my way home that day, I stopped at a bookstore and I bought Home Buying for Dummies and How the Bond Market Works, right? So that way I could really become a student of the business. But that's what got me in here. And since that day, right, for the last 26 years, I've just considered myself to be a student of the business and constantly watch out and see the ways that the services that we provide impact families for the responsibly impact families for the betterment. But look at these slides, look at these numbers, and these really kind of drive the point as to why home ownership is important.
Oh, definitely.
And this is data from it came out just a few months ago, but it's from a 2019 survey of consumer finances from the Federal Reserve. And this is household net wealth broken down by demographic. And clearly you can see here, right? So in 2019, white families, the median income was 188,000. For Hispanic families, it was 36,000, and for Black families, it was 24,000. I mean,
Right.
all politics aside, I don't care if people are R's or D's or whatever. You look at the societal issues that we have, and so much of it boils down to just one thing: haves versus have-nots. And when you really geek out and you drill down in the numbers here, the key driver for that gap is one thing, and it's home ownership and home
Yeah.
equity.
Yeah.
And so a lot of stuff happened that maybe set that up, that set up this gap, and we can't go back and fix that, right? But what we can do is do a better job, I think, as an industry in educating consumers how to fix this going forward. And the sooner that we can get people to understand that home ownership really is a way to create generational wealth, and not flip this house and get rich quick, but long term generational wealth.
Yeah.
And it boils down to, I mean, you look at this one. This is from the same survey, and this was just demographics aside. This was just homeowner versus renter, and you can see here, homeowner households had a net wealth of $396,000 versus renters at 10,400. So, I mean, that right in and of itself should make people scratch their head and really stop and think, right? I mean, so if they're renting, they're paying their landlord's mortgage.
Hmm.
If they own, they're paying their mortgage, and a chunk of their monthly payment every month goes towards principal, goes to basically a forced savings account. And then, of course, you have the whole issue of, home values increasing over time. So, in fact, I just put it out in an email today. Goldman Sachs just raised their forecast for home prices, and they're anticipating that nationwide home prices are going to grow by another 5% this year. So, if you own a home today, I mean, you could basically expect that that house is going to be worth 5% more at the end.
Yes.
If you're renting today, you can essentially expect your rent to go up by next year. I mean, it's so
Yeah. Yeah.
we've got to do a better job as an industry, right? As a society of teaching people, why homeownership is important. Um, so if you look at this chart is really, really impressive if you think about it, right? So demographically speaking again, but now we're just looking at ages. And the National Association of Realtors tells us that 36 was the average age of a first-time home buyer in 2023. So, and I look at this, this is a chart of just the U.S. population, and yeah, you can see that, okay, here in the middle you've got 35, and then you see this big wave behind that of the next crop of younger folks that are going to be coming into this first time buyer age. So we have a real opportunity again here is to show that demand isn't going anywhere. There's a lot of people that want to buy homes
Hmm.
or are going to want to buy homes. So let's get that process started sooner than later. Again, from the educational standpoint, I think this is a big one. This is from a different survey, but check this out. I mean, it showed that 20% of Americans think that buying a house requires 20% down.
Yeah.
And,
Yeah.
and, and I mean, you as a veteran, right? You obviously know that there's, you have our veterans have access to 100% financing,
Right.
but you're also in the mortgage business. There's a lot of vets that don't even know that, which is
No.
it's crazy, but it's true. I also blame the talking heads. Love Dave Ramsey, from a financial literacy standpoint, but I think he's dead wrong when it comes to needing to put 20% down on a house, because there's also this thing of time value of money. But he repeats that so much that I
Right.
think some people just automatically think, oh man, I got to have 20% to put down to buy a house.
So you see, people forget it's more than one way to skin a cat. You
Correct.
know, his way does work. It works for some people. It doesn't work for others. But there's more
Correct.
than one way to do, you know, multiple things.
Yeah.
So that's
So,
what people forget.
we just want people to know that you don't have to put 20% to put down on a house.
No.
Um, this one should be of no surprise, right? This just shows that renters basically are 3 times more likely to view saving up for a down payment as the most difficult part of the home buying process. And I mean, it's rents are at record high right now. You have inflation that's been rampant in this country for the last couple of years. It's hard for anybody to save money in reality, right? And so, just another thing. I mean, if somebody's honestly waiting to just save up and have their own cash, they might be waiting a very long time. And then we get back into this whole, well, man, by the time they saved up that much money, maybe the price of that house is higher now.
Oh, definitely.
Um, this one just, well, sorry, this one just shows, I mean, there's no question, right? The top 2 issues for millennials out there was affordability, but also down payment. And I know that if we could help people overcome the issue of down payment, then it makes the number one issue of affordability a little bit more comfortable.
Yes.
Right? We want the home buying journey to be good, to be fun. Um, and speaking of which, this one was kind of crazy, right? 40% of Gen Zers and millennials are working side hustles to save money for a down payment. And this is where I don't want to, I don't want people to be scared, into saying they have to go do something today. But I do want people to be cognizant that, if you're saving money, if you're working a second job right now to save money for a down payment, which you really don't need because we have down payment assistance programs out there, then you might, if you're trying to save up for this arbitrary number, you might have an apartment rental renewal that comes up during that time, which may put your purchasing down, further down the line, another year. And then, what does inventory and home prices and everything else look like a year from now? So if you want to work a side hustle, hey, more power to you.
Mhm.
But you don't have to do it for a down payment. This was kind of interesting. 40% of U.S. adults have less than $1,000 in savings. Again, right? I mean, it's hard to save money in today's environment,
Right.
but that's okay. I mean, that's why there's special programs for the ones from TSAHC, the Texas State Affordable Housing
Right. And I
Corporation.
was I seen that stat. I heard about this stat a couple weeks ago, and I was shocked. I said, "Oh man,
Uh,
wow."
It's hard to save money
Yeah.
in today's environment, today's economy. And this is kind of a big one. I think this is, 2/3 of renters think that they need to find the house first before they go get pre-approved for the mortgage, and
Mm,
it's wrong for a number of reasons. And this is again why it's important for us to go out there and educate folks. One of the things that we offer, like to you guys, our mortgage broker partners, is we will do a full TBD credit approval underwrite, even on a down payment assistance loan. And it's important for consumers to go through the full process of getting pre-approved, not just having your credit report pulled
right.
and have somebody look at that, but making sure that your pay stubs look good, your bank statements look good, your tax returns, because once we can determine how much a consumer can afford, then it doesn't set up the home buying journey to be, disappointment.
Right.
If you found your dream house on Zillow, and it was for X amount, but then you go apply for a mortgage and you can only get a mortgage for Y, well, then you're going to be kind of disappointed.
Yes.
But if you know up front ahead of time, okay, this is the dollar amount, this is the loan amount that we can get you approved for. Here's your shopping. Now you go out. Now you kind of set, or as a consumer, they're able to set better
Yeah.
expectations.
You know what you're working with. You got to
You
know
know
what
what
you're
you're
working with.
working with, right? And
Yeah.
and then even for our real estate partners too, it allows them to kind of have the upper hand when it comes to negotiating,
Yes.
right? Because now we can go in and ask for seller concessions, items like that. We know exactly what our offer needs to be.
Right. Right.
So again, this is just data that I just like putting out there from an
Right.
educational standpoint.
And just for my audience sake,
Yeah,
with the acronyms, I'm good with acronyms. Navy, we everything. I think we do an acronym for Navy.
sorry. Yeah, yeah.
The TBDs, for those who don't know, that's to be determined. So that's for
Correct.
you don't have an address already for the house that you may
Correct.
want to
Yes.
buy. That's going to be determined, but we can get you approved, pre-approved for a certain amount, and then you can go shop.
Yeah. It's funny you say that, right? It's whether you're in the mortgage business. Oops, how do I stop my share?
Or just hit it. I think you can hit it
There
again.
you go. Yeah.
Okay.
So, yeah. So whether you're in the mortgage world, or if you're in the, let's see, oops, cancel that. I think I just canceled that. Did I?
No, you're fine. There
Okay,
you go.
there we go. Yeah, mortgage or military, right? We have an alphabet soup of acronyms. So yeah, so if
Definitely.
one rattles off, please stop me. But yeah, but I'm just a big fan of the TBD underwrite, and again, I go back to why did we show those slides? Because I need people to understand that how important homeownership is to the long term betterment of a family from a financial standpoint. You're either, again, paying your landlord's mortgage or you're paying yours.
Right.
So let's make it be your savings account. But
Okay.
kind of coming back to your original question. I know that was kind of the long way to get around.
No, no. We people need to understand the why.
Yeah.
You
I,
know, you got
I,
to
I
understand the why.
yeah. I mean, I really believe so. I mean, when I bought my first house, I was 21 years old, and I did 100% loan program. Right. I mean, I didn't put any money down. I paid some closing cost. I got some seller concessions for closing cost, but we had a payment that I could manage. And I was 21, barely knew what I was doing, but I was working in the mortgage business, and I knew enough to know that, man, I'm wasting my money on rent. Here, I'm actually investing in myself.
Yes,
And so,
definitely.
and I wish, man, I wish our school system did a better job of teaching the financial literacy, right? It even goes into budgeting and all kinds of other stuff. But the homeownership is very, very important.
It is. It
So,
is.
but again, sorry, I know that was a long way to come
No,
around.
no,
So,
no,
what is,
man. You
so,
can. I don't think you can ever have too much information about anything in life. If you get overloaded, okay, well, you know how to listen to the parts that you need to listen to if you don't know those parts already.
Yeah,
So yeah,
absolutely. Well,
we have smart audience, we have people with smart ears, and they can kind of dissect and cipher out what they already know from what they need to know.
no,
So
no,
so
that's
I think
great.
we're good.
All
I'm
right.
perfect, man. You take as much time as you need, bro. I just appreciate your time because I know that's valuable. So
Yeah,
appreciate it.
no, no, absolutely. Well, I mean, I could talk for hours about this stuff, but I won't. I don't want to put anyone to sleep either. So,
No, no.
so I'll just come back
Okay.
to I'll come back to the
TSAT.
question, which is,
Okay.
so what is this
What
TSHAC
is
that,
TSAT?
that
Yeah.
you're
What
talking
is
about?
that? Yes,
What
sir.
is that? And first of all, yeah, the acronym is kind of weird. It's TSAHC,
Yes.
but it's pronounced T-Shack.
Back.
I know it sounds completely crazy, but even the folks who work there. So what is that? TSHAC stands for the Texas State Affordable Housing Corporation, and it is a nonprofit state agency whose primary mission is to help low to moderate income consumers, Texans, with their home ownership goals. And I think what you'll find here too, right, is as I go into some of the details, these programs aren't just for low income folks, and I think there's a big myth that's out there that needs to be dispelled. I mean, we have income limits and high cost areas that well over six figures,
Hmm.
and that's not low income. But again, because it's so hard for people to save money in today's economy, that these programs are out there. But nonetheless, so what TSHAC does is they take their nonprofit status and they pool funds and they provide that to consumers in the form of either a grant program where they're going to give up between 2 to 5% in the form of a grant. And what that means is that however much assistance the consumer gets, it would be forgiven after the borrower makes six payments on the mortgage. But the most popular program right now, and it's really due to availability too, is the other form of assistance they have, which is down payment assistance from 2 to 5% in the form of a 3-year forgivable loan. Now, what does that mean, right? Because that's a lot to roll off the tongue there.
Hmm.
So let's just say that we have and I'm just going to use generic numbers. Let's say we have a $300,000 loan amount, and let's say our borrowers are getting 5% down payment assistance. So
Okay.
that would be $15,000, right? Now, keep in mind, the most popular loan program to go with this product is an FHA loan.
Okay.
Well, as you know, FHA only requires 3.5% down.
Right.
So if a consumer is getting 5%, well, it covers their down payment and some of their closing costs. So I think that's just important for people to understand too. It's not just the down payment; it's also some of your closing costs. But
Yeah. Okay.
nonetheless, so the borrower in that example is going to get $15,000, and that is a second lien, but it's at 0% interest, and there's no payment due. And after 3 years that the borrower's living in the house, then it's going to be completely forgiven. So
Okay.
essentially, it's like free money at that point.
So potentially there's a second lien there, but it's invisible. As long
It's
as
it's
you're doing
invisible.
what you're
It's
supposed to do, you're in the house for 3 years. When you say 3 year forgivable, so I'm taking, I'm being the devil's advocate for the
sure.
consumer. I'm
Yep.
taking that as long if I move out in 2.5 years, I'm going to be paying something back.
That is correct.
Okay.
So if somebody were to sell their house in that example, or even refinance within them, then yeah, however much money was borrowed, I guess in the term of the down payment assistance, would need to be paid back. However, right, and here's the little asterisk mark.
Okay.
However, in the terms of a refinance, the balance can be rolled into a new loan up to the
Okay.
maximum loan to value, right? So if the home appreciated in value, it may not mean cash out of pocket by the consumer. Or in the case of them selling a house in 2.5 years, if the value goes up, they may not have to pay anything because it would be included in their loan payoff.
Okay.
So, but not to scare anyone. I mean, and and this goes back to right other things. I just want people to understand that, primary mission here is to get you into a house.